Give me a Nifty 50 stock or two Nifty 50 stocks where you're ready to allocate disproportionate amount of money. I'm not going to give you the option to say ICICI Bank. That's something you told me last time.
Correct. So State Bank of India is one because I think the interest rates will start falling from here. The return horizon has to be 12 to 18 months. Because I think interest rates will be cuts will be rear-ended, so State Bank of India is definitely one.
But numbers, SBI numbers have been extremely volatile. Why do you like that stock?
Because I think the volatility this time you will see, I think you will see incremental slippages coming off slowly over the year, and also I think the issue on the power sector will eventually get resolved.
How would you describe SBI's provisioning policy? Have they provided too much? And now if the cycle reverses, bad loans could become good loans?
If you look at the numbers of SBI, the net interest income has grown to a level that if provisions fall by 30%, right, the upside to earnings will be unbelievable. It will deliver the best earnings growth amongst all banks. Is that kind of a thing. So, and it's a huge stock. Foreign ownership is only 10% now. It's also come down. So from it's under-owned as well. And so clearly SBI will be a stock which will do very well.
Do you have a price target for SBI, because you don't have one for United Spirits?
Yes, I don't. So SBI should give you 25 to 30% return easily in the year. And the other one is Dr. Reddy's. That's also a stock where people have been expecting a lot from the management.
Bolt out of the blue, isn't it? No one likes it, no one knows it.
Correct. So the point is, that's the one where the management has been saying that the lots of products approvals are coming, and so you're going to see the earnings of that company revive over the next 12 to 18 months. Again, seriously.
What is the issue with Dr.
It's very cheap. It's very cheap relative to peers. The valuation gap has to narrow as it starts delivering earnings.
One would argue that Dr. Reddy has not delivered. European problems are in a mess. A generic market is getting extremely competitive. They've not done anything special ever when it comes to their R&D pipeline.
No, but the point is on their basic US generic business. That is the one which is doing very well. All the pharma stocks have got re-rated on that business, not on any other business.
That's a bread and butter business.
Correct. And where also they are getting new product approval. So there, you've seen Avocad doing very well, right? You've seen Avocad launching products which are rare, limited competition, and there you see Avocad making disproportionate money in every product. Dr. is a similar business model. The point is that at least the part of the US business is in the similar business model. The R&D business as a percentage of revenues is now very, very low. So I think all the cleanup, all the expectations have all been toned down. They're at rock bottom. People have just about started getting interested, is my sense on that stock. So my view is large cap, Dr. Reddy's.
What about the discretionary part of the market? Now, the street is clearly divided on how to approach autos. Yeah. The bulls would argue interest rates will come out, that will fuel demand. Some would argue that interest rates will come down in a measured manner, and that will not kickstart the auto demand.
So I would agree with the second thesis. The good quality companies there, Bajaj Auto will keep doing well. I don't think I see too many risks. Bajaj Auto is anyway a global company, it's no longer an Indian company, so it's levered to a whole lot of other things. The issue is, locally I would agree, auto sales will stagnate for some time. It will not do so well. It will take some time for auto sales to do well, but more towards the second half of the year. And there again, so auto has gone through its initial re-rating that the cycle has turned. Right now, earnings has to come, and earnings will take about 5-6 months to seriously come. And during that period, the stocks will consolidate. They'll go through a time-wise correction. So I would not be overweight on autos right now.
What about telecom? Do you think that could be the dark horse for this year? Because telecom companies, for the first time, have indicated that yes, the worst is behind the Indian telecom sector.
I have the same issue that I had last time. That while the industry is consolidating, while the spectrum pricing is coming off, while their pricing is going up, I am not sure about regulatory headwinds here. So I am not sure whether somebody will not come and say, hey guys, you can't raise prices beyond that. Already, if you notice read the papers last month, when Arcom and Bharti all started raising rates, there's some commentary somewhere saying that, hey, we are watching you. And if we see prices going beyond a point, we will.
So are telecom stocks in a long-term bear market?
No, I think now they'll be in a consolidation phase, so mildly positive return phase. I don't think they're in a bear market. They will not be stocks which really more like utilities kind of returns. You will not see spectacular ROCs, ROEs coming out of telecom, is what I think. Till you get comfort around government policy, which I don't have comfort around now. if the government policy were to change and if people were to get comfort that hey, this is actually purely commercial and actually there will be no tariff caps on this, then it's a beautiful industry. So then your argument is right. It's coming out of a consolidation phase, and these stocks could do hugely.
And the balance sheet is also very leveraged.
So the point is, so that's on that event one would bet. Then Bharti could be the stock of the year, but I am not confident of policy there.
Right, fair point. So as a group, which is one group or a cluster to your mind, which is in a bear market and which is in a bull market?
The cluster is state-owned banks.
They are in a bear market, and the bear market could become bull market for them.
Correct. Clearly, very clearly.
And where do you think the bull market could become bear market?
You'll say mildly, if you take consumers like levers and FMCG kind of stuff, where it will not become a bear market, it will go through a consolidation. I don't see, it's not as if something is really overpriced to that extent that, you will say that, because if the market does well over the next 12 to 18 months as we expect, then these stocks will not do very badly.
So Wockhardt, United Spirits, if the JP Associates, if these were some of the special situation stocks for 2012, which are the big special situation stocks for this year? Where the risk is high, but reward also could be.
So I say state-owned banks is one, clearly. State-owned banks is clearly one, where you will.
So apart from SBI,
and the other special situation stocks are the power companies. So your Adani Group, your India Bulls, and your Lancos and not GMR so much, but Lancos. These three groups can become really, really.
Why do you like Lanco? I mean, they've got a horrible balance sheet.
If they are special situation stocks, the special situation is they have huge receivables with SEBs. SEBs pay them. The coal problem gets resolved. The gas problem gets resolved. These are special situations.
So if you're buying Lanco, you're pretty much buying it at the option value.
Correct.
Do you think KFA could be a special situation stock?
No.
Why not?
No. I think the license itself is becoming an issue. So I would never buy an airline stock. I am quite circumspect.
If we wrap, give me your largest holding and then we'll wrap the show. What is the name of your largest holding? Public information. We get your portfolio.
No, absolutely not. I own a lot of stocks.
Okay. We'll leave it there. Appreciate your time. Thank you for joining us.
Thank you.
That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for watching the show.